Building business credit in 2026 is a completely different game than it was just a few years ago, because the underwriting algorithms have become much smarter and faster. If you want to go from $0 to $100,000 in business credit limits, you need a precise roadmap that follows the current rules of the financial system. First, you must understand that business credit is entirely separate from your personal credit, although having a good personal score will act as a massive catalyst to speed up the process. To start from scratch, you must establish a legitimate business entity, which means you need to register or a corporation in your state and obtain an employer identification number from the IRS. Do not try to use a personal phone number or a generic Gmail address for your business, because the automated systems used by lenders like Chase and American Express will instantly flag your application as high risk. You need a professional business website and a dedicated business phone number listed in the 411 directory to show that you are a serious operator. Once your foundation is solid, you need to register with the major business credit bureaus, which are Dun & Bradstreet and Experian Business and Equifax Business. Your next step is to obtain a DUNS number, which is a unique 9-digit identifier that allows lenders to track your payment history. The fastest way to start seeing results is by opening net 30 accounts with vendors that report to these bureaus. Companies like Hewlett & Quill and Granger are classic starting points, because they often grant small lines of credit to new businesses without a personal guarantee. You should buy small items you actually need for your office and pay the invoices immediately, because wait until the due date is a mistake if you want to boost your score quickly. Paying 5 to 10 days early sends a signal to the bureaus that your business is extremely liquid and reliable. After you have 3 to 5 vendor lines reporting, you will likely see a paid score generated, which is the business version of a FICO score. In 2026, fintech banks like Mercury and Row and Relay have become essential because they offer dedicated business checking accounts that integrate directly with credit building tools. You should keep at least a few $1,000s in your business checking account at all times, because many modern lenders now use cash flow underwriting, where they look at your average daily balance rather than just your credit score. Once you have some seasoning on your accounts, you can move into Tier 2 credit, which includes store cards like Office Depot or Amazon Business, or even fuel cards if your business involves driving. These cards usually offer higher limits ranging from $5,000 to $10,000, and they help bridge the gap toward the major bank cards. The real goal is to get into high-limit unsecured business cards like the Chase Inc. Business Preferred or the American Express Business Gold and Platinum cards. To get these in 2026, you generally need a personal credit score of at least 700, because these banks still want to see that you are personally responsible before they hand over $50,000 limits. When you apply for these major cards, you should emphasize your projected revenue and ensure your business category is not listed as a high-risk industry like credit repair or real estate investing if you can help it. Always use your legal business name exactly as it appears on your articles of organization. Another secret to hitting that $100,000 mark fast is to apply for multiple cards from different banks within a short window of time, so that the inquiries don't immediately impact your ability to get the next card. However, you must be careful not to trigger a manual review by being too aggressive. Focus on building a relationship with one primary bank like Chase or Bank of America, because having a dedicated relationship manager can help you get manual overrides for higher limits as your revenue grows. You should also look into fintech companies like Ramp and Bricks, which offer corporate cards with no personal guarantee if you have significant cash in the bank. These companies often provide much higher limits than traditional banks because they analyze your real-time banking data instead of just your credit report. As you use these cards, keep your utilization below 30%, even though business credit doesn't always report utilization the same way personal credit does, because it still affects the internal risks for the banks on you. Every 6 months you should call your card issuers and request a limit increase by citing your growth in monthly revenue and your perfect payment history. If you follow this sequence of building a strong foundation and using net 30 accounts, and then moving into fintech and major bank cards, you can easily reach 6 figures in total credit limits within 12 months. Remember that business credit is a tool for leverage, so you should only use these high limits to invest in assets or inventory that will generate more income for your company. Stay consistent with your documentation and keep your business and personal finances completely separate to avoid any issues with the bureaus or the banks. 2026 is the year of automated lending, so the more data points you can provide to the bureaus, the faster your limits will climb. Because the entire financial landscape has shifted toward real-time data and artificial intelligence underwriting, the goal of reaching $100,000 in credit limits starting from zero is more achievable than ever, but it requires a level of precision that most entrepreneurs completely overlook. First and foremost, you must understand that the banks are looking for a business that looks stable on paper before they even glance at your revenue. This means you need to have a registered entity like an LLC or a C Corp, and your paperwork must be flawless, because any discrepancy between your Secretary of State filing and your tax records will trigger an automatic rejection. In 2026, you must have a dedicated business address that is not a residential home or a simple PO box, because lenders now use satellite imaging and commercial databases to verify if your business is operating out of a legitimate commercial space. If you are working from home, you should use a professional virtual office service that provides a unique suite number and a physical building presence. Your phone number must be a local business line, and it needs to be registered with national directories like 411, because the algorithms used by Chase and American Express search these databases instantly to verify your legitimacy. Your website and professional email address are no longer optional, because in 2026, a business using a Yahoo or Gmail address is seen as a high-risk hobbyist rather than a serious company. Once your corporate identity is established, you need to apply for your IN from the bureaus and then immediately open a business checking account. In 2026, you should choose a bank that is tech-forward like Mercury or Relay, because they provide cleaner data feeds to the credit bureaus, which helps your score climb faster. The next phase is the Tier 1 vendor credit phase, where you establish your first strata lines without needing a personal guarantee. You should look for vendors like Hewling and Quill and Granger and So Creative, because these companies are known for reporting positive payment history to Dun & Bradstreet and Experian business. The secret to the 2026 strategy is volume, so you want at least 5 of these accounts reporting, and you should make small purchases every month and pay the bill as soon as the invoice is generated. Do not wait for the due date, because the faster you pay, the more points you earn on your Paydex score, which is the fundamental metric used to measure business creditworthiness. Once you have a Paydex score of 8 or higher, which usually takes about 90 days, you can move into Tier 2 credit. This includes store cards like Amazon Business and Wayfair and Home Depot and Office Depot, where you can easily get limits between $5,000 and $10,000. These cards are essential because they show the big banks that you can handle larger amounts of revolving